Welcome back to the Dinar Daily. We often discuss currencies that have been overlooked by mainstream finance, yet have captivated the attention of a dedicated community of enthusiasts and analysts. For years, the Iraqi dinar, Vietnamese dong, and even the Zimbabwean dollar have been viewed with a mixture of hope and skepticism. The narrative surrounding them was frequently dismissed as wishful thinking or a niche fascination. However, a significant change appears to be underway. One that is reshaping how these currencies are perceived on a global scale. What was once relegated to the shadows of financial conversation is now drawing a surprising amount of attention from credible sources. The long-standing belief held by many is that a day would come when these currencies would see a dramatic revaluation, transforming the lives of those who held them. This possibility, once considered a distant dream, is now feeling more immediate and tangible. For some, this moment may already be here. Major financial platforms and recognized exchange hubs are starting to report on these currencies, suggesting that a seismic shift is occurring in real time. The quiet conviction of many individuals is now being met with a new form of acknowledgement, moving from the realm of idle speculation to verifiable financial data, according to various verified sources and reports circulating within financial channels. The Iraqi dinar is now showing a pegged value of $5.39. This is a considerable departure from its historical rates and a development that is garnering significant interest. Simultaneously, the Vietnamese dong is reportedly trading at $3.89, a figure that represents a remarkable increase from its previous valuation. In a separate but equally compelling development, Zimbabwe's newly introduced currency, the ZiG, is holding steady at a value of 14 cents after a period of intense volatility and instability. What makes these updates so compelling is that they are not mere rumors whispered in online forums or small investment groups. These figures are being cited and recognized on established financial platforms and trading screens. This shift from niche speculation to mainstream acknowledgement is a powerful indicator that something fundamental has changed. It is providing a sense of validation for many who have patiently held on to these currencies for years, believing that their conviction would eventually be rewarded with a historic revaluation. The journey to this point has been anything but uniform for these three nations. Iraq, in particular, has faced decades of conflict and economic sanctions. Its path to recovery has been a long and arduous one. Yet, its progress has been built on the foundation of deep structural reforms. The nation has moved beyond a sole reliance on its oil reserves, though expanding energy production has certainly played a role. The government has also made a concerted effort to implement anti-corruption measures, strengthen its regulatory systems, and rebuild its standing with international financial bodies like the IMF and the World Bank. These reforms have transformed the Iraqi dinar from a symbol of instability into a testament to resilience and financial strength. Vietnam's story is a testament to disciplined and strategic economic growth. Over the years, the country has focused on consistent trade reforms, which led to its entry into the WTO and its emergence as a major global hub for manufacturing and exports. This has been a deliberate and methodical process, attracting multinational corporations that now view Vietnam as an indispensable component of their supply chains, especially in sectors like electronics and textiles. This deep integration into the global economy has provided a solid and compelling case for a stronger Vietnamese dong. Meanwhile, Zimbabwe's financial narrative is a powerful cautionary tale about hyperinflation and economic collapse. The country's new ZiG currency, which is backed by gold reserves, represents a bold attempt to reset its monetary system. ZiG is not just a simple currency adjustment. It is a symbol of a new beginning, implemented with the intention of fostering greater fiscal discipline. While still in its early stages, the ZiG has introduced a sense of cautious optimism for a nation that was once thought to be beyond economic repair. Its success hinges on its ability to maintain stability and restore public trust. The most tangible signs of these financial transformations are not just on data screens. but are visible in the daily lives of people on the ground. In Iraq, there are reports of unusually long lines at bank branches in cities from Baghdad to Basra, as citizens seek to verify their dinar notes. This is a clear indication of a growing public confidence in the currency's new strength. Exchange offices are reportedly booking appointments weeks in advance, reflecting the seriousness with which locals are approaching this financial shift. In Vietnam, the ripple effects are being felt by businesses and exporters. Companies are actively renegotiating international contracts, adjusting for the stronger purchasing power of the dong. The currency's increasing recognition in global trade is no longer an abstract idea. It is influencing how businesses plan their future, set their prices, and manage their projections. The expectation of a sustainable revaluation is now a driving factor in their daily operations and long-term strategies, indicating a fundamental change in market dynamics. In Zimbabwe, small-scale traders who once faced the constant threat of hyperinflation are cautiously embracing the new ZiG. Early indications suggest that the prices of essential imported goods are beginning to stabilize, a development that was previously unimaginable. This gradual restoration of stability is slowly building confidence among the population. The knowledge that the currency is backed by gold reserves provides a crucial psychological and practical assurance, helping to rebuild trust in a monetary system that was once shattered. Collectively, these on-the-ground observations confirm that the currency shifts are not merely theoretical concepts. They are actively being experienced by citizens, workers, and business owners. While the effects are still emerging and may be uneven, they point to a financial transformation that is impacting both local economies and global systems. These developments provide real-world evidence of a financial realignment that is touching countless lives in tangible ways, from the streets of Hari to the bustling markets of Hanoi. For those following this unfolding narrative, the most compelling evidence comes from the reported exchange rates. Unlike speculative forecasts or unconfirmed chatter, these rates are being recorded and cited across a wide range of financial reporting platforms and exchange centers around the world. As of today, the Iraqi dinar is reportedly trading in a range between $5.39 and $6.53, depending on the specific exchange hub. This represents one of the most remarkable currency reevaluations in recent financial history. The Vietnamese dong is similarly experiencing a historic surge, with its value ranging between $3.89 and $4.10. This is a dramatic and unexpected contrast to the low valuations that many had grown accustomed to over the years. Meanwhile, Zimbabwe's gold-backed ZiG, despite being the newest of the three, is holding a stable average of between 14 cents and 16 cents. This stability is a significant achievement, especially when compared to the hyperinflation that had rendered the old Zimbabwean dollar virtually worthless. These figures are not just isolated data points. They are being acknowledged on professional trading screens and by multiple financial hubs. For those who have maintained their positions in these currencies through years of doubt and uncertainty, these rates feel like a powerful form of validation. It is a sign that patience and long-term conviction may finally be yielding substantial results. On a broader scale, these movements prompt serious questions about global economics. What happens when currencies once considered insignificant suddenly assert a new level of strength on the world stage? The full implications of this rebalancing are still unfolding, but it is clear that we are witnessing an extraordinary moment of financial realignment. When major financial shifts occur, the perspectives of analysts and experts become crucial for understanding the landscape. Frank26, a recognized currency analyst who has monitored the dinar for an extended period, has stated that the Iraqi dinar's recent movement is not a surprise. He frames it as the logical outcome of a series of deliberate steps that Iraq has been systematically executing over many years. His assessment reframes the narrative from an unexpected windfall to a well-prepared strategic outcome. In Vietnam, Dr. La Hong, a respected economist, has provided important context for the dong's rise. He attributes it not only to specific government policies, but also to Vietnam's slow and methodical integration into the global supply chain. He points to the development of key industries, such as electronics and textiles, which have transformed the country into an indispensable partner in global trade. This deep-seated structural strength, he argues, is the true foundation of the currency's current revaluation. A regional banker in Zimbabwe has offered first-hand accounts of the ZiG's implementation, noting that its adoption among ordinary citizens and small businesses has been stronger than anticipated. However, he advises caution, emphasizing that the currency's long-term success will depend on continued transparency, particularly with regard to verifiable audits of the nation's gold reserves. These diverse perspectives from an analyst, an economist, and a banker offer a comprehensive view of the factors driving these developments, underscoring their potential to reshape not only individual economies but also global financial patterns. It is vital to recognize that moments of significant financial change often attract opportunists and fraudsters. As these currencies gain value, scammers see an opportunity to exploit people who may be new to this environment. Reports are already surfacing of fake exchange centers that promise above-market rates to lure in holders of IQD, VND, or ZiG. These operations often exist in unofficial settings or on unverified online platforms, promising quick transactions but disappearing once funds or notes have been handed over. Another prevalent risk is the phishing scam, where individuals receive communications that appear to be from official financial institutions, requesting personal banking information. Providing this sensitive data can lead to stolen identities and drained accounts. There are also reported cases of counterfeit currency buybacks where criminals try to trick people into exchanging their authentic notes for worthless counterfeits under the guise of an official redemption program. Protecting your assets requires vigilance and adherence to a few simple rules. A core principle for safeguarding oneself is to only transact with licensed and recognized financial institutions or verified redemption centers. If an offer seems unusually generous or too good to be true, it is almost certainly a warning sign. Any attempt to pressure you into making a rushed decision is a major red flag, and you should walk away. In this new financial environment, patience and caution are not just good practices. They are essential for protecting your gains. The opportunity may be real, but so are the surrounding dangers. For those who have held these currencies through years of skepticism, the current moment represents a unique opportunity. However, realizing true success requires more than simply cashing in. It demands a thoughtful and strategic approach to managing this new wealth. The first crucial step is to verify the authenticity of your notes, checking for watermarks, holograms, and serial numbers. This simple action can help you avoid accidentally presenting counterfeit bills during the redemption process and reduce the risk of financial loss. Secondly, it is essential to plan ahead and book appointments with financial institutions. Many banks are already experiencing a significant increase in demand for redemptions, with backlogs stretching for weeks or even months. Arriving at a branch without a confirmed appointment could result in unnecessary delays. A third crucial step is to seek professional advice from qualified financial and tax advisors. International currency exchanges can have complex tax implications that vary by country, and failing to plan for this can lead to serious financial liabilities down the line. Beyond the initial transaction, holders should think strategically about reinvestment. The act of cashing out is only the beginning. True, long-term success comes from preserving and growing that wealth over time. Diversifying into stable assets, exploring long-term investments, or even using a portion of the funds for philanthropic efforts can help create a lasting impact. Staying informed is also critical, as exchange rates can fluctuate daily. Relying on outdated information could lead to missed opportunities or avoidable losses. By taking these practical steps, individuals can transition from passive participants to active stewards of their new financial reality. The revaluation of these currencies is not happening in a vacuum. It is sending ripple effects across the global financial system. Central banks and major financial institutions in the United States and the European Union are beginning to adjust their foreign reserve policies to account for the strengthened positions of these once overlooked currencies. In Asia, nations like China are closely monitoring the developments in Iraq and Vietnam, recognizing that stronger currencies could lead to more efficient trade and enhanced regional cooperation. In the Gulf states, Iraq's new monetary strength is reshaping oil contracts and negotiations. Where Iraq once had to accept terms dictated by larger economies, it now possesses greater leverage and credibility at the bargaining table. Across Africa, the African Union is observing Zimbabwe's gold-backed ZiG with great interest, seeing it as a potential model for other nations rich in natural resources that are seeking to achieve monetary stability. If the ZiG proves to be a successful and sustainable model, it could inspire similar frameworks throughout the continent. This broader trend signals a rebalancing of economic power on a global scale. Smaller, formerly marginalized economies are beginning to demand a more prominent place in the global financial conversation. For the first time in decades, we may be witnessing a shift in the traditional power dynamics between established giants and emerging players. The most significant evidence of this is in the verifiable exchange rates being reported across financial platforms. The Iraqi dinar is reportedly trading between $5.39 and $6.53, while the Vietnamese dong ranges from $3.89 to $4.10. Meanwhile, the ZiG is holding steady at 14 to 16 cents. These figures, which are being logged on trading screens, are a powerful sign of this new financial reality. For those who have endured years of uncertainty, these rates are a form of validation, suggesting that their conviction is now being rewarded. The implications for global economics are still unfolding, but it is clear that we are witnessing a moment of profound financial realignment that few could have anticipated with such force and clarity. It is important to reiterate that while this financial opportunity is significant, it also attracts risks. The potential for scams, fraud, and other malicious activities is heightened. Reports of fake exchange centers and phishing scams are already circulating, and individuals should exercise extreme caution. Only dealing with licensed banks and verified financial institutions is a critical step to protecting your assets. If an offer seems too good to be true, it almost certainly is. Patience and vigilance are not just virtues but necessities in this environment. Protecting your gains is as important as realizing them. The initial excitement of a revaluation must be tempered with a practical and thoughtful approach. Verifying the authenticity of your currency, booking appointments in advance, and consulting with financial and tax professionals are all crucial steps in a successful redemption process. Cashing out is the first move. A true financial success comes from a strategic plan to preserve and grow that wealth over time. Diversifying your assets and staying well-informed about market fluctuations will be key to navigating this new chapter. To every individual who has held the Iraqi dinar, Vietnamese dong, or Zimbabwe's ZiG through years of doubt and skepticism, this moment may feel like a monumental vindication. The perseverance and belief required to continue holding on have led you to a juncture where patience is being rewarded. However, with this opportunity comes a great responsibility. The same discipline that guided you through the years of waiting must now be applied to managing these gains wisely. Do not let haste, greed, or misplaced trust undo what foresight and conviction have achieved. The financial landscape is always in motion and rates can fluctuate. Policies can shift and global markets can react in unpredictable ways. Therefore, a continued commitment to wisdom, caution, and a clear strategy is essential for this next phase. Our goal is to provide credible, clear, and timely updates, cutting through the noise to deliver grounded insights. We will continue to track developments, including confirmed exchange rates and official government announcements, to help you stay informed and make confident decisions. This journey may be just beginning, and with the right approach, you will be prepared to meet it with clarity and confidence.